What if you've made a monthly pay plan with the IRS, got them off your back, but now you find you can't afford the monthly payments that are called for in the installment agreement? What do you do? What are your options? I'm going to show you what to do next. Hey, I'm Jim Flauaus. I'm authorized by the U.S. government to represent taxpayers before the Internal Revenue Service. I help taxpayers to resolve tax problems, settle their debt, sometimes for less, and end the stress of dealing with IRS collections and back taxes. You set up a payment agreement with the IRS. They're the world's most powerful collection agency, so you did good. You got them off your back, you settled into a monthly pay plan, but now you find out the payment amount is more than you can afford. You can't keep up with the payments. What's going to happen? What do you do? Well, here's the good news. You have got options. The first option is called a partial pay installment agreement. Now, right now, you've been on a full pay installment agreement. The IRS set up a pay plan. The monthly amount was simply based by the amount you owed them divided by whatever the number of months was, and they came up with a monthly payment amount. Really, when you set that thing up, no one really took into account what are your monthly income and expenses. What are you able to pay without jeopardizing the health and the well-being of your family? In other words, when you take your monthly income and then you subtract out all your monthly expenses, is there some disposable income left with which you can then pay your tax debt via an installment agreement? A lot of people find out that there's really no wiggle room at the end of the month and they can't make the payments that they agreed to. So a partial pay plan will allow you to submit to the IRS your financials. In other words, submit your monthly income and your monthly expenses. And if they agree by what you document that you are legitimately in need of help here, that you don't have disposable income to make the payments, then they can reduce the payments to fit your financial situation. In other words, you have some disposable income, but it's not enough to make the full IRS payment. So they'll agree to a partial pay plan. How do you do this? Well, you submit a collection information statement, Form 433, to the IRS. This will document your monthly income and expenses. You'll also give them information on bank accounts, on other assets, your equity in your home. Actually, they get pretty up close and personal. But if it can work out so that you make a partial pay agreement instead of having to pay an amount you can't afford, and still hold the IRS at bay where they agree, since you're making partial payments, that they're not going to take any enforcement action, it can be well worth the effort. There is a second option. The second option is called not collectible status, or currently not collectible. How do you get placed into currently not collectible status? Well, it's a similar story, but in this case, after submitting the financials, you have no disposable income left to make those tax payments. You've actually documented to the IRS that you've lived within the local and the national living standards that the IRS uses to assess, hey, is this legit? I mean, they're not going to arbitrarily agree with you that, hey, you can't afford these payments. You have to document, and within standards of local and national housing, food and clothing, utilities, auto, and other expenses, you have to document that you are paying your reasonable expenses, you have a certain amount of income, but hey, there's no wiggle room left at the end of the month. In this case, the IRS will agree to put your account on hold for 1 year, 2 years, or maybe even more. So this can be a great way to get your finances back into shape and not have to deal with payments to the IRS or worry about your tax debt for at least a year or two. Now, many taxpayers ask about an offer in compromise, whereby you can submit an offer and have the IRS accept a lower offer so you settle for less. But it's not a realistic option in this particular case. When you are in a payment agreement and you can't make the payments, you need some quick relief. And an offer in compromise can take up to a year to go through the process and have it actually all work out. For right now, go for something that is easier, quicker, and puts you in a good standing with the IRS. And a partial pay agreement or currently not collectible status are two ways you can do that. I trust this information has been helpful to you. If it has been, please click the subscribe button so I can keep giving you updates every week on IRS news and how to deal with the IRS. I'm Jim Flauaus. I'm authorized by the federal government to represent taxpayers before the IRS. If you or someone you know has unfiled returns, unpaid taxes, unopened or unwanted IRS notices, or an unexpected notice of intent to levy, or even a lien, my number and my email address are down below in the description of this video. I'd be happy to talk with you and see what we can do to put your tax problem behind you. That's it for this time. We'll see you next time.